The current administration has added an additional $5.3 trillion to the national debt, now approximately $16 trillion, the largest amount in U.S. history. In fiscal year 2011, spending reached $3.6 trillion, nearly a quarter of our gross domestic product. Adjusted for inflation, that's more than 3 times its peak level in World War II, and almost half of every dollar spent was borrowed money. 3 programs, Medicare, Medicaid, and Social Security, account for over 40% of total spending. While these levels of spending and debt are already harming job creation and growth, projections of future spending growth are nothing short of catastrophic, both economically and socially, and those dire projections do not include the fiscal nightmare of Obamacare, with over $1 trillion in new taxes, multiple mandates, and a crushing price tag. We can preempt the debt explosion. Backed by Republican Senate and House, our next president will propose immediate reductions in federal spending. As a down payment on the much larger task of long-range fiscal control, we suggest a tripartite test for every federal activity. First, is it within the constitutional scope of the federal government? Second, is it effective and absolutely necessary? And third, is it sufficiently important to justify borrowing, especially foreign borrowing, to fund it? Against those standards we will measure programs from international population control to California's federally subsidized high-speed train to nowhere, and terminate programs that don't measure up. Balancing the budget-cutting spending is not enough. It must be accompanied by major structural reforms, increased productivity, use of technology, and long-term government downsizing that both reduce debt and deficits and ignite economic growth. We must restructure the 20th century entitlement state so the missions of important programs can succeed in the 21st century. Medicare, in particular, is the largest driver of future debt. Our reform of healthcare will empower millions of seniors to control their personal healthcare decisions, unlike Obamacare that empowered a handful of bureaucrats to cut Medicare in ways that will deny care for the elderly. We must also change the budget process itself. From its beginning, its design has enabled, rather than restrained, reckless spending by giving procedural cover to members of Congress. The budget process gave us the insidious term tax expenditure, which means that any earnings the government allows a taxpayer to keep through a deduction, exemption, or credit are equivalent to spending the same amount on some program. It also lumped a broad range of diverse programs under the heading of entitlement, as if veterans' benefits and welfare checks belong in the same category. Far worse, the process assumes every spending program will be permanent and every tax cut will be temporary. It refuses to recognize the beneficial budgetary impact of lower tax rates, and it calls a spending increase a cut if it is less than the rate of inflation. Republican members of Congress have repeatedly tried to reform the budget process to make it more transparent and accountable, in particular by voting for a balanced budget amendment to the Constitution, following the lead of 33 states which have put that restraint into their own constitutions. We call for a constitutional amendment requiring a supermajority for any tax increase, with exceptions for only war and national emergencies, and imposing a cap limiting spending to the historical average percentage of GDP so that future Congresses cannot balance the budget by raising taxes, inflation and the Federal Reserve. A sound monetary policy is critical for maintaining a strong economy. Inflation diminishes the purchasing power of the dollar at home and abroad and is a hidden tax on the American people. Moreover, the inflation tax is regressive, punishes those who save, transfers wealth from Main Street to Wall Street, and has grave implications for seniors living on fixed incomes, because the Federal Reserve's monetary policy actions affect both inflation and economic activity. Those actions should be transparent. Moreover, the Fed's important role as a lender of last resort should also be carried out in a more transparent manner. A free society demands that the sun shine on all elements of government. Therefore, the Republican Party will work to advance substantive legislation that brings transparency and accountability to the Federal Reserve, the Federal Open Market Committee, and the Fed's dealings with foreign central banks. The first step to increasing transparency and accountability is through an annual audit of the Federal Reserve's activities. Such an audit would need to be carefully implemented so that the Federal Reserve remains insulated from political pressures and so its decisions are based on sound economic principles and sound money rather than on political pressures for easy money and loose credit, determined to crush the double-digit inflation that was part of the Carter administration's economic legacy. President Reagan, shortly after his inauguration, established a commission to consider the feasibility of a metallic basis for U.S. currency. The commission advised against such a move. Now, 3 decades later, as we face the task of cleaning up the wreckage of the current administration's policies, we propose a similar commission to investigate possible ways to set a fixed value for the dollar, ending the housing crisis and expanding opportunities for homeownership. Homeownership expands personal liberty, builds communities, and helps Americans create wealth. The American dream is not a stale slogan. It is a lived reality that expresses the aspirations of all our people. It means a decent place to live, a safe place to raise kids, a welcoming place to retire. It bespeaks the quiet pride of those who work hard to shelter their family and, in the process, create caring neighborhoods. Homeownership is best fostered by a growing economy with low interest rates, as well as prudent regulation, financial education, and targeted assistance to responsible borrowers. The collapse of the housing market over the last 4 years has been not only a severe blow to the entire economy, but also a personal tragedy to millions of Americans whose homes have lost value and to so many others who have lost their homes. Combined with high unemployment, the decline has left countless homeowners saddled with mortgages exceeding the value of their homes. The response of the current administration has done little to improve, and much to worsen, the situation. By discouraging private sector investment, it has stalled the housing recovery. Its massive intervention in the housing market, with the Federal Housing Administration, FHA, Fannie Mae and Freddie Mac backing nearly all new mortgages, has hit the taxpayers with a bill for almost $200 billion to bail out the latter two institutions. It has spent billions more on poorly designed and ineffective housing assistance programs. Making matters worse, the Congress, under Democrat control, enacted the Dodd-Frank Act, a massive labyrinth of costly new regulations that deter lenders from lending to creditworthy homebuyers and that disproportionately harms small and community banks. As a result, home sales remain weak, investment in housing remains depressed, construction industry jobs remain down, and mortgage lending has yet to recover to pre-crisis levels. Rebuilding homeownership, we must establish a mortgage finance system based on competition and free enterprise that is transparent, encourages the private sector to return to housing, and promotes personal responsibility on the part of borrowers. Policies that promote reliance on private capital, like private mortgage insurance, will be critical to scaling back the federal role in the housing market and avoiding future taxpayer bailouts. Reforms should provide clear and prudent underwriting standards and guidelines on acceptable lending practices. Compliance with regulatory standards should provide a legal safe harbor to guard against opportunistic litigation. Fannie Mae and Freddie Mac were a primary cause of the housing crisis because their implicit government guarantee allowed them to avoid market discipline and make risky investments. Their favored political status enriched their politically connected executives and their shareholders, at the expense of the nation. Both Fannie Mae and Freddie Mac should be wound down in size and scope, and their officials should be held to account. The FHA, tripled in size to more than $1 trillion under the current administration, has crowded out the private sector and is at risk of requiring a taxpayer bailout. It must be downsized and limited to helping first-time homebuyers and low and moderate-income borrowers. Taxpayer dollars should not be used to bail out borrowers and lenders by funding principal write-downs. While the federal government must prosecute mortgage fraud and other financial crimes, any settlements received thereby should be directed to individuals harmed by the misconduct, not diverted to pay for unrelated programs. FDIC insurance for bank depositors must be preserved. However, to correct for the moral hazard created by deposit insurance, banks should be well capitalized, which is the best insurance against future taxpayer bailouts. The federal government has a role in housing by enforcing non-discrimination laws and assisting